Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market recap. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay guys, so we're gonna hop right on into the charts. Let's see what's been going on with the dollar to start off with. So dollar's been having a good couple of days, right? So comparatively to what we've been expecting over the last couple of weeks, we are finally having some upside. Now we are still not showing any major moves to the upside. I do foresee us starting to break up over the next coming days and weeks towards 103.65, so towards the top side of this blue zone. Now this blue zone goes all the way back. Let's actually close this off here. So all the way back to 2015, so made around March of 2015, and pretty much held as resistance from 2015 all the way through 2017, all the way through to 2020, and then finally broken through this my apologies, last year. So not this year, last year, back in May and June of 2022. So just this zone is super important because as everyone else is getting bearish, we're coming into a bullish support zone for the dollar. So if you've been in the Discord, if you've been in the Lemon Garden, or you've been following my recaps, you know I am very bullish on the dollar. I haven't really wavered at all. And as we've come into this zone, I've only gotten more bullish. And I've become more vindicated, at least in my mind, as everyone else is becoming more bearish because they're being blinded by the drop we had in most latter half or latter 3 months of 2022 and not really seeing the forest, right? They're only looking at the trees. We are in a major support zone, and this is not the place to be calling for the death of the dollar. Now, that may come, okay? That may come, but that doesn't seem like it's going to be here when you have the masses of people being bearish. And I'm telling you right now, the smart money seeing what I'm seeing, this is an opportunity to look for strong dollar in the coming months, and that means a weaker risk on assets. Okay, so we tapped into the monthly bullish fair value gap, so we're tapping into liquidity, and we are now trading within this blue zone. So watch for us to get back towards the top of this blue zone, testing that. We may falter there at about 103.65, then look for some more downside, potentially even back towards the monthly bullish fair value gap, and just look for consolidation within here. But eventually we are likely going to make our way to the daily downtrend line. So that can be as high as, depending on how quickly you rise, going all the way from 107 to potentially, if we took all these months coming out over into late summer, going early fall, potentially back towards 103 to 104 if we were going to consolidate continuously in this blue zone. But overall, once we get towards this daily downtrend line, it's very likely we will begin to falter there, show some bullish consolidation, and then, yes, a breakthrough higher. The reason why I am looking for upside overall is because if you go to the monthly time frame, you're going to start seeing a different picture from what most people are thinking about the dollar. Now, what I'm seeing from the dollar is something that is extremely bullish, okay? So I know you see a lot of lines here. I'm actually going to take a couple off. We'll bring them back, but we're going to take them off for now. So as you can see, this is the monthly chart. We had a massive monthly downtrend since pretty much 1985. Okay, lived under here, under this line, all the way until 2014, towards the beginning of 2015, broke out, came back down, tested this structure bullish, bounced off, then had a divergence from that bounce off, and then a blast off in 2022. Okay, so we had a blast off in 2022, and then we broke this at the time resistance zone, bullish, and now are coming back for a bullish retest of that zone, of that support zone now. Okay, so this to me is a breakout on the monthly structure. Now we're having a bullish pullback, and potentially we found that pullback zone to then lead to, in the coming months, to higher levels, going back towards the 120s. Now it may seem crazy, but I'm kind of eyeing that. I am looking for these highs here at about 118 to potentially 120 to be revisited within the next 1 to 3 years, and potentially even higher. I've been calling this the decade of the dollar. So pretty much from 2020 all the way until 2030, potentially 2034. I do see the dollar getting stronger. Now, this may happen because all fiat currencies in the world are going to start just bleeding against the dollar, and there's going to be a mass rush to the dollar. Potentially, we're going to have a dual polar world where you got half the world, the East, running to the yuan, and then you have the Western countries or the allied U.S. countries that are running towards the dollar, and that will cause both of those currencies to inflate. Potentially. Either way, the technicals are telling us that this story is not bearish. This story is bullish as of now. Now, what would make it bearish, in my view, is the loss of this weekly uptrend line, okay? So that means there's a ton of downside in my book before I would get actually macro bearish on dollar. Now, if we lost this weekly uptrend line, it's still not ultimately bearish if you look at it from the point of view that we could just be potentially coming back down to test the monthly downtrend line once more. However, if we do that, we're testing the lifeline. If we lose that lifeline, that's pretty much the lowest pivot all time from the dollar being projected into the future. If we lose this line, it's very likely the dollar is dying, okay? So I don't see us actually coming to this weekly uptrend line currently, but if we do, that's the level that would tell me first that, okay, it's true, the dollar is going away, or at least it's going to be severely harmed, and we're going to see, a new world, okay? So as of right now, I would warn you against being too bearish. But of course, keep your eye on the charts. We have to wait and see how price plays out and see what happens in the world. Nothing is guaranteed. It's all probabilities. But right now, the probabilities are leaning heavily to more upside in the coming months and years for the dollar. Okay, so now let's hop over to the US indexes. Let's take a quick look at the Dow. So the Dow, let's get to the daily chart real quick. So daily chart, so we had a nice break, so we had a nice little pop up from these liquidity levels here, and also testing this downtrend line that we broke bullish, finally having that nice extension, and we got very close towards this bearish fair value gap, very close. We pretty much wicked right under it. We barely missed the underside of it, and to me, it's showing signs of slowdown. It's showing signs that it wants to pull back, again, a bullish pullback in this scenario, to then grab the liquidity down here. So if we do see a pullback down to here, we will have to watch how the price action is formed here. We want to give it some time, because it is potentially just going to be another higher low from this low right here. If we do lose it, then pretty much follow my doodle. It's very likely we actually do break back down towards these fair value gaps down here, pretty much back down towards these wicks, and then I would still look for potential signs of another move up. Now the Dow does look fairly bullish overall, not entirely bullish. I mean, there are signs where I see, okay, we could potentially just be in a bear market rally, and we're going to break down and then start breaking the lows, and this red line here we might break back towards here, that's about the COVID 2020 high. So right before the lockdowns hit, this was the high, and then we had the dump that led to the lockdowns here. Okay, so we could potentially be coming back to here and lower. That is definitely in the cards, but I will say, as of right now, the charts are telling me look more so for a higher low to form. So that could be in these fair value gap clusters, or potentially even a double bottom structure. It could be a higher low structure slightly, or it could be a slight swing failure pattern, taking out these lows and then pushing up higher. And ultimately, I do see us getting back towards this level here, so back towards 35,000. Okay, we are in the red zone, and what I mean by that is we could fail here and make new lows, and it would be completely fine structurally. It would make complete sense. So I want to make that very clear. I'm just going off of what I'm seeing, a little bit of my intuition, and also what the chart is telling me currently. I would look for some slight higher highs coming into the rest of this year, especially if the Fed is going to pivot. Now, we don't know for sure. I have been hearing some mixed signals. Most people expect a pivot coming after May's raising of rates, potentially a halt of some sort. However, if you listen to BlackRock, right? So if you listen to like Blankfein, he's saying that no, they're expecting multiple more hikes coming. So we can't really predict the Fed. We can only react. And all I would say is just follow the charts, and the charts are telling me look for a short-term pullback and then looking for a higher low to form here. This seems to be the most probable, a higher low structure to form here, and then potentially, if we do lose that, look for a double bottom structure, because once we get into here, the probability is increased quite high that once we start tapping into this liquidity down here, to look for another move, most likely back towards 32,400, 32,500. Okay, if we do have that extension, let's say we make this higher low here and we extend up higher from here, we want to look for that, the break of these highs, right? So going towards the 35,200, 35,500, and potentially even tapping into 36,000. Okay, once we get towards 36,000, that's where I would look for a major reversal, a major rejection, because I'm still in the camp of a bear market rally for both the US indexes and for crypto. So if we come into this level here, this would be the level I would expect for the rejection to happen if we're in a bear market rally. If we're not, then we'll probably still see a rejection here, but we'll probably see a bullish consolidation, a very large one, start forming after the rejection here. Okay, so it's going to be a very exciting time. We're going to really be able to figure out what's going on with the markets, and I'm looking forward to it. So if you're not in the Lemon Garden, make sure you join the Discord, because we're all going to follow it together, and the trades we've had since pretty much last year and going into this year have been absolutely rock solid. So if you're looking to join a community, make sure to join ours. You'll find the link in the description. Next is S&P. So S&P, similar to the Dow, came into this bear market, bearish fair value gap. So this actually did tap into it. It is clearly showing signs of slowing down. You see the impulsive move, and you see a slight consolidation, then an attempt to have an impulsive move, and then wicks. Right, so it's all turning into dojis, another clear sign of indecisiveness and weakening of the uptrend. So look for that pullback, and I am looking for these lows to get taken out, grab the liquidity under this pivot, and then come into these fair value gaps here. And this would be the first zone where you're going to be looking for that higher low. So it's very important, if we're going to get those higher low structures to start forming in both the Dow, the S&P, and obviously the Nasdaq when we go over it, that's implying faster, shorter term upside moves, that we're not going to be looking for any large consolidation. If we don't do that and we start coming into the lows down here, or coming into making a double bottom structure, look for much longer term moves, a much larger consolidation, which would then probably push deep into the summer. So if you're looking for upside, we do want to see higher lows, because they'll be much faster that way. Okay, but I am looking for this. This does look more likely for S&P to come down here and then make a higher low structure from there. Okay, so next is Nasdaq. So Nasdaq, major extension, right? So Nasdaq was in this downtrend and this descending channel for quite some time after being in this very large ascending channel for quite some time. So we finally broke bullish back in the beginning of this year, and since then we've just had wonderful extensions. I would say compared to the Dow and the S&P, we've definitely extended much more in the Nasdaq, which by nature makes sense considering it's mostly tech in here, because you're getting a lot more risk on assets in the Nasdaq. So by nature you're going to see it have more bigger swings, I would say, either up or down, just because of what's inside the Nasdaq, right? So look for this to have, if it moves down, for a much more extended move down. Okay, so look for this to move not just under these lows, but potentially even all the way back down towards these lows down here. So back towards sub 12,000, 11,900, maybe even 11,800, and then maybe even tapping under this low into this fair value gap here. So back to 11.5. Okay, so I am looking for a pretty significant drop on for the Nasdaq if we're going to have that drop coming in the Dow and the S&P, and the strength coming into the dollar in the coming days, weeks, and months. Okay, so watch for that pullback now. Now, of course, we break up. First zone we're going to watch out for is taking this high pivot here, and that's pretty much tapping into this orange zone up here. So back towards like 13,900. I don't see that right now unless the Dow is going to start, telegraphing that move, but I'm not seeing that in the Dow, and I definitely don't see it in the Nasdaq. So I'm leaning more towards downside in the short term for all of the US indexes. All right, next is oil. So let's take a quick look at oil. Having a nice little tumble of a day. If you've been following the Lemon Garden, you know I'm Very bullish on oil, just like I am with dollar. Very, very bullish. Now, it is playing out kind of as expected. Had a nice little breakdown. We are in a major zone. So this is a major support zone, just like the dollar. We had a massive breakup, and then we had a gap up because of Saudi Arabia pretty much cutting supply, which was unexpected. And then we tapped into this bearish fair value gap, grabbing some liquidity, and now are correcting back down. Now, the correction back down, to me, is bullish. We took out these high pivots here. We took out this pivot here. And now we're looking to fill this gap. And then what are we doing? Making that higher low, right? We want to make that higher low structure. Now, what can we do to make the higher low? We can come into this gap, fill this area, that will make a higher low, or we can come in and fill these fair value gaps all throughout here, right? So you have a fair value gap right here that's really attractive. This would be my target, this bullish fair value gap right here is where I would look for oil to potentially get back to about 72.24 to $70, and then look for it to hold here, make a higher low from this low, and then you're likely going to have continuation back towards 89, 90. And then as we're going into the hotter months, into the summertime, you're going to see demand rise naturally. Not to mention you're having Germany cut off their final nuclear plants. I don't know how they're going to deal with this, with the energy needs scale. So there's going to be more demand with oil there, whether they like it or not. You have all the European countries are going to need more oil because of the hotter months coming. And then hopefully it doesn't happen, but it may happen where we get more escalations in the conflicts out in Ukraine and Russia, and potentially a conflict that starts to finally take the next step in both China and Taiwan. All these catalysts will lead to oil having more upside. Okay, so, and also not to mention, if the Fed does pivot, whether that's halting or somehow even, God forbid, easing rates again, that's going to push inflation higher, and that's going to push the price of oil higher. So, I would say it's a loser's bet to bet against oil right now. I would be looking for opportunities to get into the long side of oil. So any pullbacks, in my opinion, are looking like an opportunity. And just know, in the Lemon Garden, I do run a swing trade service. If you're in the swing trade service, I've been very bullish on oil, but I've not taken many. I've barely taken a position for the past 6 months. I've been just observing. Know that I'm about to pull the trigger on a lot of these oil companies and a lot of the oil ETFs to start getting in the position to get ready for upside, because I am very, very confident this is coming now, watching the chart and watching the fundamentals go in our favor. So if you're not in the Discord, make sure you are. If you want to join that swing trade service, take a look. You'll find the info on that in the Patreon link in the description. Okay, next is gold and silver. So boy, oh boy, gold and silver. I mean, gold has been absolutely incredible. I'm very bullish on gold, just like I am with oil and dollar. If you're noticing it, hopefully you're noticing a pattern. I've been very bullish on the commodities in general. Gold has been absolutely fabulous. I mean, back in the Lemon Garden when we were, doing the swing trades back in November, we were actually getting long all through here on gold stocks, gold ETFs, and then we pretty much took our profits slowly during this consolidation and this little blast off. We were able to get out most of our position, and then since then I've just been watching it, and I'm looking for an opportunity, and I'm starting to see a really good opportunity. I do think we're going to have a pullback on gold. One, because obviously we're going to have strength in dollar, in my opinion, and we're so extended. I mean, we're so extended, and the pullback on gold will be bullish, in my opinion. It will be a bullish pullback, so we'll be looking for a move back down towards the 1930s and potentially even sub 19. Okay, we're looking at potentially like 1850. All right, so coming back to these levels may seem bearish, but it's not. I mean, look at this move. Look at this absolute move. We almost came to the all-time highs, so we're going to be looking for gold to make a bullish pullback, make a higher low structure, to then lead to a larger consolidation that will eventually, in the coming months, to potentially even next year, we have to see how this plays out, for it to then start to break out through the highs here. Okay, so look for a significant pullback, and the pullback can be all the way sub 18. To be honest, it really can. As long as it doesn't take out the lows down here, you're pretty much golden. Gold has built itself a structure in a way that is extremely powerful. Now I'm looking at first right now for about 1930, and then potentially 1900. Okay, I do love what I'm seeing here. Now, if we can continue to trade sideways here for a significant amount of time, mainly about 2 to 3 weeks, then my opinion may change. We may be looking at a bullish consolidation, a very large bullish consolidation that will lead to pretty much taking out the all-time highs. But as of right now, I am looking for downside. I do see more evidence of downside, at least coming back down towards this zone here. All right, so pretty much come in to attack some of this imbalance here, and then eventually, if we do have continued selling because of strength in the dollar, you will look for these lows to eventually get targeted to grab the liquidity under there. And then once that happens, I would start flipping super bullish on gold and start looking for major long opportunities on gold. Okay, next is silver. So silver came and filled out all the liquidity up here, and I am looking for the downside on this as well, just like gold. So we want to see this show signs of a pullback down, coming in to essentially grab as much of this imbalance of this move up as it possibly can. So coming into these low pivots here, right? So you see this low pivot here, low pivot here, low pivot here. So you want to see a grab liquidity under 23.6, under 22.85, and then potentially even all the way under 22.15. Now I would first be looking for it to get towards this consolidation again, holding this consolidation over here about 24.4, and then see how price action is built. Now if I do start to see price action, let's say it does something like this, comes into this level and starts kind of grinding up like this, I would then be looking for continued downside from this sort of move coming into this level here at about 22.5. Once you're at 22.5, I think it's a safe bet to start looking for really nice long positions. Now we may have to build them out coming from 22.5 all the way down to about 20 bucks, and that's what I'm definitely comfortable with. This would be a great, in my opinion, a great accumulation zone if we're going to have a really bullish structure that forms on silver and on gold. So I would be watching gold quite closely, and I'd be looking for that to be mirrored on silver. So this is kind of what I'm eyeing right now. We'll have to wait and see. I'm very patient with silver and gold. I don't feel a rush at all to go after it. So we're just going to keep our eye on it, see what happens. That's why I always say, you want to stay vigilant, but you also want to stay patient, right? You have to be patient. All right, next and finally is Bitcoin. So let's take a quick look at Bitcoin. Bitcoin's been having a pretty active couple weeks really. But look at this on Bitcoin. So I mean, Bitcoin has treated us so well. So I just want to go over quickly pretty much all of this move here, right? So in the Lemon Garden, in case you're just watching this video for the first time, we actually were long back at 18,375. So in the swing trade service, I got us long on average 18,375. We built out a very large long over this period of time, and we ended up getting an average entry of 18,375, and we rode that all the way up, pretty much all the way until about, I want to say 24,000, 23,500. Took our profits around there. Once this dump happened, we flipped long again here, so we went long here, and then we rode that up to about 26,000 and change, 26,300, 26,500. Closed out the long there, and now I'm observing. Now we're actually short. Okay, so now we're virtually short around this zone that we're at, and I am looking for downside. So the downside I am looking for now short term is 25,000, potentially going towards this blue zone here in this daily bullish fair value gap. So that's around 24,000 at the top zone. At the bottom zone, that's about 22.5. Now I am leaning more towards a return to this level here, so towards the top side of this fair value gap and towards the pretty much the median line I have here at 25,260. Okay, so I am looking for this zone here to be revisited. That's where I am looking to potentially close the short. Again, price action will dictate my actions. If it tells me to do something else, I will do that. I will always adhere to the price action and to the chart rather than my own ideas. Okay, so I'm willing to definitely change my opinions if the chart tells me to. So what's been interesting about Bitcoin, it's been such a washing machine, as I've been calling it. I mean, here this was such a grind, right? So this was definitely trapping a lot of people, both longs and shorts. Punishments everywhere, so many traps. Clearly it tried to break as a bullish pennant. Okay, so you have the flat top, rising lows, bullish pennant structure, tries to break bullish, and now we're seeing, are we going to actually hold this pennant bullish off this retest, or are we going to end up breaking down further and having this be a failure? Okay, so this could potentially be a failure, and I will tell you this, looking at the price action, I am getting more and more convinced of traps. Okay, this does feel like a major trap. I've had a couple recaps, both live streams in the Discord and pre-recorded videos, where I've mentioned I feel like when I look at this price action, again, this is all my personal opinion. I don't trade my opinions or my feelings, but when I look at it, I'm just sharing my feeling. It feels like a trap, right? This feels like some sort of trap that's being set by the bears for the bulls. It doesn't feel real. There's been so few consolidations that have led to significant upside that's been sustainable, right? So you had this move here, we had a nice move up, consolidation, breakdown, then a very small consolidation, super move up, then that failed and we broke lower. Then we didn't have a consolidation here at all, right? We had pretty much a V bottom, pull all the way up, taking out these highs up here. And then we had this consolidation that, in my opinion, I did not find this bullish. So if you go back into the recaps, I'm very open about it. I was looking for this to potentially break bearish. I did not find this to be bullish. And I did say, if this was going to turn bullish, I would want to see this stay here for a couple of weeks to a month or so. It did stay here for quite some time, but the price action just wasn't convincing. We did have that break up, so I was like, if we're gonna go up higher, we're going towards the 32s, the 34s, potentially even 38. But I was still not convinced. But I don't trade my opinion, like I said. I just trade the chart. And I felt that we are still in the danger zone. And once we start showing signs here of slowing down, I just felt more and more sure that we're gonna probably see some sort of breakdown. Now, 2 days ago when this candle happened here, I was very confident that we're going to see continuation. And I gotta tell you, yesterday did trick me. I was very unsure. I was like, okay, maybe it's a bull trap, maybe it's a bear trap. And caught bears, kind of like me, caught them off guard. We thinking that we're gonna pull back down, and the bulls just sprung that trap and pretty much are pulling up. But now it's unless today closes really strong, this feels like a bear trap. I'm sorry, a bull trap. This feels like bulls are getting trapped here. And my head would tell me, in my history of trading over 10 years now, this is likely a bull trap. You have a massive extension, very little consolidation. This consolidation here did not feel bullish. Did not seem bullish to me. Seemed bearish. And then it seems like you had a false breakout potentially. We'll have to wait and see. This could just be a retest of the pennant's top. All right. If this does break down further, it looks like a failure. And if that is the case, then I'm looking for these lows down here to get taken out, and we're going probably towards 25.5 at first, and then potentially even lower towards the 24s, the low 24s. So I do think this is a very it's a tough time. I want to make this very clear. Someone who's had a lot of experience trading, this is a tough time. This is actually not easy, okay? This is not as clear-cut as some will act like it is after it plays out. In real time right now, I will tell you, this is a very difficult structure. My head is telling me look for downside, but there are definitely signs that do tell me don't be too married to the bearish position. We could definitely pull back up, get another leg up towards the 30s, so 32, 34, 36. The reason for that is smart money will be looking to unload here and also begin to open shorts here. Now, there's a couple reasons for that. One is that's what I'm doing, right? So I do consider myself smart money. Agree or disagree with me, that's fine. I do consider myself smart money. When I first opened up this long, I was looking to unload up here. Now, I did not succeed at that. I did let go prior to that for a couple of reasons. Mainly, let's go to the monthly chart real quick. Just full disclosure again, I try to be as transparent with you guys as much as possible as I can. I'm sorry, just jumping over my words, but I try to be as forthright with everything I do for everyone who's watching. Now, that's with successes and failures, right? So it ended up being a great trade. Don't get me wrong. We were in at 18,375. I ended up closing off the closure around the closure of this monthly candle. Now, the reason why is because I was very clear to myself and everyone in Discord, if we failed to close above this month's high, which was at the time 23,955.86, I would close the long. Now, because it's a doji after a major bullish engulfing candle, now that's not too bearish, but I was looking for a pullback to happen after that, and I would look for a reload to get long off of that, and I didn't want to really threaten the profits we had in case this ended up being a failure and we start breaking the lows. So if I had hindsight, hindsight tells me I should have stayed in. Obviously, we definitely had a bigger move up. However, I do find myself to be right in this assessment, because we did end up breaking down half of this candle. We did flip long down here again, right? So we did end up going long here again on the daily, again for a smaller position, but we did end up doing it. But everything is telling me now, just like it did back then, that I should be looking for downside, a serious downside. Now, I am more confident today, as of right now, but we are about 2 hours and 50 minutes away from this candle closing, and we are going to likely see a breakdown if we can have a bearish engulfing candle close here. Okay, I do think bulls are getting trapped here if we have a bearish engulfing candle. Now, if we do not, it does lead potentially to a consolidation that goes further sideways. And the longer we can stay up here, just like over here, the more bullish it will probably get. All right. So mark me down. I am bearish short term. I do think the dollar is going to strengthen, so that should bring some pressure on Bitcoin and all of crypto. I do think first step is to get towards 25,500 and then potentially down towards 24,000, and then we'll have to see how the price action looks there. So we are short in a lot of crypto. We have some longs as well. So here's our long positions, and then here are our short positions. So we're fairly evenly spread out. Now the long positions are a little bit newer, so they're not too far off entry. Some are in some drawdown, some are actually still in profit, and then the shorts are virtually the same. We have some in deep profit, we have some in break-even territory, and then we have some that are like minorly in the red, or probably break-even now, or going into major profit. Actually, now that I'm looking at it, so it's. We in the Lemon Guard, I would say, are pretty well positioned. We also only have about 18% of the account exposed, so it's very small exposure. So we're ready to build positions, and I got to tell you, I'm looking forward to May. I do think that May is going to provide us opportunities to potentially build out longs, because if I'm correct on this structure breaking down, we'll be able to bank in on the shorts and then slowly transition into more longs, building out on the ones we have, and then building new ones. Because remember what I always tell you guys, this is to the members, when retail is short, we slowly transition long, and then when they're going long, we slowly transition short. Okay, it's very important you slowly transition. We want to be the ones selling the stuff they're buying and buying the stuff they're selling slowly. Okay, so we're going to keep doing that, and because we've done that, we haven't had a loss since springtime last year. So we're going to keep that going, and hopefully we can keep that going for the coming months and the rest of this year. Okay, all right, everyone, that is it for this recap. Again, if you have any questions, make sure to leave a comment down below. If you don't want to hear me ramble on, make sure to check out the timestamps. Okay, so if you're watching the premiere, you won't see a timestamp, but if you wait till after the premiere, you'll see timestamps in the description, so you can just get to what you want to see from there. And if you haven't joined the Discord, do so. It is a free Discord. We have a lot of free value for everyone, so you don't have to be a premium member to have any value in that Discord. You get free live streams. I even do one free trade per crypto and stocks, usually once a month, sometimes 2 times a month. And definitely I'm always available on the Discord or virtually, so you can always ask me a question there. It's the easiest way to get in contact with me. And if you are interested in becoming a premium member, just know we have a swing trade service that is extremely successful. I mean, it's very successful. We have all the trades on the Discord you can observe. Just go to pretty much this room here at closed position. Closed positions. Stocks or cryptos. Let's do closed positions crypto. So this goes through all our trades. Now this is it's absolutely been a killer. Okay, so make sure to give it a look if you want to definitely join the swing trade service. Obviously, we also have a tutoring service. I'll teach you how to trade. I'll teach you how I trade. I'll help you develop your own trading system. Most importantly, I'll teach you how to actually do proper risk management. That's usually what most people are missing. We can usually get to the crux of the issue through there. So if you want to learn how to trade, you want to do it on your own, but but you just can't get over the hump, make sure to check out the tutoring service. You might find the value there. And then finally, but not least, I do have a day trading room every day, every weekday, Monday through Friday, 9:45 a.m. Eastern Time US. I do a day trading room where we're trading mostly Forex. We have some guys who do trade gold, and potentially we'll trade like the US indexes in the future. But it's also a room to get people funded. We do have someone who is funded, who finally got funded through us. We have 2 people funded in the Discord. And if you want to become a funded trader through FTMO or whatever prop firm you're interested in, you may want to join that room. Check that out if that's of interest to you, because I think all of us could definitely help each other take really good trades that will eventually lead to you becoming a funded trader. All right, everyone, that is it. Make sure to always remember, be patient, be vigilant, and be nimble. I love you guys. Take care.